Hi, I am Anna. I come from www.ntvforex.com. Tech leads the way again. Analysis http ntvforex.com News ID 666F6E98 2020 11:21:35 a.m. The US is returning after the long bank holiday weekend to a lively session on Tuesday, with tech stocks once again leading the way lower and braced for more turbulence. The recovery late Friday may have been short-lived, with the sector coming under heavy pressure across Europe and the big US names that have propelled US indices back into record territory coming in for a difficult session. Of course, put in perspective, most of these stocks haven't even hit 1-month lows yet, so there's arguably plenty of room below. The premature dip buying on Friday though does show that there's still plenty of interest in these stocks, despite the sharp drop, with investors likely sensing opportunity from the discount they're now trading at compared to their peaks last week. That may not protect the share prices in the immediate future, but I can't see it lasting too much longer. Apple was almost 20% off its high before it recovered on Friday, Amazon more than 12% and Alphabet more than 10%. Tesla, which was up almost 500% from its pandemic lows at Friday's close, was down more than 25% from its peak at one stage. I can't see investors losing interest anytime soon, but they may allow for a bit more of a discount. UK Brexit gamble weighing on the pound. The pound is once again coming under pressure on Tuesday as no-deal Brexit comes back to the forefront of traders' minds. New government legislation is believed to undermine parts of the withdrawal agreement in relation to Northern Ireland, which threatens to frustrate the process even further at a time when compromise is required. With just over a month to go until the European Council summit, by which time both sides agree a deal will need to have been struck, both sides are ramping up pressure on the other to compromise on core issues, and this may well be another example of that. Of course, it's a risky game undermining your own trustworthiness at a time when you're trying to sign a trade deal. Whether this kind of gamble could be a deal breaker or not, traders are likely to continue to be very sensitive to anything that jeopardizes an agreement and leaves the UK facing a global pandemic, high unemployment, and no deal all at the same time. Especially against the dollar, which is breaking out of its downtrend and eyeing a correction of its own. Correction well underway in oil. September is shaping up to be a corrective month. Tech stocks are sliding, the dollar is making a comeback, and the oil rally has run out of fuel. With $39 falling in WTI and $42 in Brent, the correction is on. There's been a number of reported catalysts, the latest being Saudi Arabia selling at a discount, but the reality is that we're seeing stale longs exiting en masse. The loss of support further cements the correction that was already underway and accelerated the move. The next test for Brent is $40, with $37.50 being an interesting level in WTI. Deeper correction on the cards for gold. Gold is coming under a little pressure as the dollar wrestles to break its downtrend and move into correction mode. The greenback is having some luck in early trade this morning and may now look to build on its early successes. The sell-off has been losing momentum since the start of August, and today's breakout could trigger a broader corrective move. That doesn't bode well for the yellow metal, which was already showing signs of weakness after last month's sudden plunge, and now $1,900 is looking very shaky indeed. Not that this would be catastrophic, the longer-term's fundamentals are still bullish for gold, but a deeper correction is looking increasingly on the cards. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.